started, we have today as our topic all about credit cards and what you need to know. Excellent topic that we will be covering today. Also, for our attendees who are on the line, you will be on mute, in mute mode throughout the presentation. However, if you have a question, please take a look at your GoToWebinar dashboard, and right at the end of all of those great options for you is a chat feature. If you click on that arrow for the chat feature, it will allow you to submit questions for myself or our great panel. So one of our panelists who also is on the line today is, excuse me, one of our panelists on the line today is Miss Ann Wires from Life Credit Union. Ann, do you want to just say hello?
Welcome, everyone. We are so glad you're here and participating and learning about this very important topic, as Evelyn said. So welcome.
Thank you for that. We also have one other panelist that will be joining us a little bit later to help us answer any questions that you may have as we go through the presentation. So we are scheduled for about an hour. We're going to go ahead and get started. And just a little bit about myself and my company, Consolidated Credit. We are a nationally recognized nonprofit organization, and our mission is really to assist families throughout the United States in solving money management problems that they have through education and professional counseling. And your credit union, Life Credit Union, has partnered with KOFE, which is a product of Consolidated Credit, to bring this webinar series to you today. Part of the features that we offer under KOFE is financial wellness, education, housing counseling, and debt management services. So we have been in the business for over 25 years and have helped over 5 million people with solving their money management problems. So we're a bit of an expert at it. Okay, so our topic today is all about credit cards, what you need to know. We all have them. Sometimes we love them, sometimes we don't love them so much, but credit cards in our culture today is almost a requirement in order to be able to conduct financial business in our culture today. So we're going to take a look at credit cards and how to maximize and optimize your use of them, as well as some tips for making the most of your credit cards. So our agenda today will include looking at the different types of credit cards, some pros and cons of using credit as a credit card itself. We'll introduce you to the 3 C's of credit, and also some tips for building your credit history and your credit responsibilities. All very key topics as it relates to credit card management. Now, I always like to start presentations with some facts, what I call facts and stats. So let's look at some credit card facts. 70% of Americans are actually using credit cards. That's 174 million people right now in the United States. About half of them actually have what we call subprime credit scores, below 620, and this is the FICO score, but they're still using credit cards. So everybody has them just about, and everyone uses them. So in 2015, the Americans made about over 33 billion, that's with a B, credit card purchases for a total value of over $3 trillion. So we have a huge credit card debt that we're carrying in this country, and that average household credit card debt is around $15,000. So To the degree that we're able to manage our debt effectively, it really goes a long way. There was also a study that showed that people generally keep their first credit cards for about 15 years. And that's one of the reasons why creditors target young people as potential customers because they know that that relationship will last a very long time. And because people typically don't switch their credit cards once they start with one company. And this chart again just gives us some quick stats, some statistics regarding credit card use in the United States. And this is from a Nerd Wallet study from last year, 2017, that shows the different categories, how people are using credit. So about 41% are showing that they're spending more that they can actually afford on unnecessary purchases related to credit. That's like 40%. Another 33% are using credit cards for non emergency uh, expenses or services. And then another 33%. And I thought this was an interesting statistic that they're using credit cards for necessities that are not covered uh, by their household income. I thought that was pretty interesting. All right, so then let's get into the meat of it. What is a good definition of a credit card? Okay, and basically, a credit card, it's a payment card that financial companies issue, and it allows the card holder to pay for goods and services based on that person's promise to repay. And then the third component of the definition is that the financial services company, they create a revolving account, grant the cardholder a line of credit from which they can borrow money for purchases and cash advances. And one of the things to note is that a credit card is actually a transaction where users are borrowing money. And that's important to note. Uh, uh, Sometimes there are different perspectives on what a credit card is and how it's used, but at its core, it's a medium to allow cardholders to actually borrow money. Okay, so let's take a look at the different types of credit cards. So we have a few here that's indicated. First of all, our general purpose credit cards include Visa, MasterCard, Discover, the ones that we see and use ourselves every day. These general purpose credit cards require an approval. There's interest rates involved, and typically there's a credit limit that is also involved. Some of the cards offer incentives and rewards, and some of them are, may offer promotional rates in order when you initially sign on. So these are general purpose credit cards. Charge cards like American Express are a little bit different. With charge cards, you must pay off your balance in full every month. And if you don't, then the remaining balance will be assessed late fees and a relatively high interest rate. These cards also offer reward programs. Our third type of card is retail credit cards, the department store credit cards, and gas station cards. And with these type of cards, approval may be somewhat easier or more relaxed because it's somewhat based on your credit score, but the rates are often higher than the general purpose cards. And there also may be limited rewards associated with the retail cards. And then finally, the prepaid cards, which are really not true credit cards in that they don't require a credit check or and they don't affect your credit score. However, they do require a cash deposit and you must replenish the card as you spend. So it's almost like a debit card in a sense, as opposed to being a credit card. Okay, so these are the major types of credit cards that are in use at this time. Now, I do want to make a note about some other types of credits that are out there that people are using, but as the slide says, not all credit is what we call good credit. There are alternative financial solutions out there, such as payday loans, car title loans, and pawn shop loans that people do use in lieu of credit. Okay, for the payday loans, these are short installment loans, short term loans that typically do not require credit check, but the interest rate, and that number is correct, is usually over like 300%. So they're extremely high interest rates and high finance charges that are associated with payday loans. Something to avoid if you can. Car title loans uh, also don't require credit check, but they do require you to sign over the title of your vehicle over to the lender. So they also have high interest rates and very strict repayment terms that if these terms are not met, then they can easily lead to a car repossession, which is something you don't want to risk. Then pawn shop loans, they allow you to take a piece of property into a pawn shop and receive money on loan in exchange for the collateral. Again, if you don't pay what you owe quickly, you'll lose your property, and the APR or the interest rate can go as high as 300%. So these are alternative finance solutions that do not necessarily require credit check, but they can be costly and risky. So avoid them if possible. So, what are some of the pros and cons then of using credit? We know we kind of got to have it in our culture, the way things are set up. So, what are some of the pluses and minuses associated with using credit? Some of the advantages of using credit include you're able to buy things right now. Okay, I don't know if some of you all remember uh, back before credit really became widely used, some some of the department stores would allow you to do a layaway plan, and some of them still have that available now, where you would select your purchases, put down a deposit, and you kind of pay on it along the way. And after it's paid, they release the merchandise to you. Credit now allows you to buy the items you need right now, so you don't have to wait 3 6 months. One of the other advantages is that it reduces your need to carry cash. There are a lot of folks right now between their debit, credit card, Apple Pay, and some of the other mobile apps. Really, you don't have to carry any cash. And this is one of the other advantages as well. It also creates a record of purchases, and it may be more convenient than writing checks, and it allows you to consolidate all of your bills into one payment. So there are some very good advantages to using credit. Okay. Now, what about some of the disadvantages? Of course, you have to pay interest on your purchases. And remember, when you use credit, you are actually borrowing money. And you are, in essence, you're paying a higher price for that same item, good or services. So when we use credit, we are making a choice to pay a higher price. Okay, as opposed to when we use cash, it's in a sense like using a 0% credit card that is accepted everywhere. So cash is like a 0% credit card, but when we use our credit cards, we are actually agreeing to pay a higher price for those goods or services because of the interest. And we also may acquire additional fees depending on the terms and conditions for your credit card. And if you encounter financial difficulties, then that may uh, create a situation where you're losing track of how much is spent each month, and then it turns into a late payment scenario. So, and in that case, then there are fees for that, and fees for this, and fees for that. So there are fees associated with using credit. And studies have also found that people actually spend more when they're using their credit card versus when they actually pay cash for that purchase. So, some disadvantages to credit along with advantages. So, then, how do we actually choose a credit card? Here are just some quick notes to keep in mind when you are shopping for a credit card. And there are so many that are out there. One of the great resources that's available is bankrate.com, that last bullet that basically gives you a really good comparison of various credit cards that are available based on your FICO score, based on your region, based on your work history. So it's just a good resource for you there. And then, so when you're shopping for a credit card, you want to make sure you understand the interest rate or the APR, the annual percentage rate that is charged. You also want to make sure that you take a real close look at the fees that may be associated with your card, whether it's an annual fee. Do they charge transaction fees? What about late fees? What about special fees for balance transfers or cash advances? All of these are part of your evaluation that you want to include. Then, what about a grace period? This is something that's rare these days on a lot of the credit cards, that they give you a grace period, which basically says that you have a set time after the payment, actual payment due date, before interest charges start to kick in. Right now, most of the credit cards charge interest from the day that you make that purchase. But there are still some that are out there that will give you that grace period before, or after your payment due date. So make sure that you know your penalties for any missed payments, and sometimes the reward cards may actually have a higher interest rate. So you have to make that comparison. And before you sign up for a credit card, make sure to shop around for your best terms. Again, check out bankrate.com. It's a great site to check out terms between and do comparisons between cards. Make sure you read and understand the contract, and don't rush into signing anything. Just take your time, do your due diligence in order to make that right choice for the card that's going to work for you. Okay, so far we've covered the types of credit, the pros and cons of credit, and some evaluation tips on how to choose and select a credit card. So let's take a moment and have a little bit of fun right now by actually taking a poll. Okay, and I'm going to show a couple of questions here, and from your screen, you can actually select your answer, and we will be able to see how you vote. So let's go ahead and do that poll right now. So the question for this first poll is, which of the following is not true? I'm sorry, which of the following is not a true credit card, in that its payment history does not get reported to the credit bureau? That is it a charge card, general purpose credit card, prepaid credit card, or retail store card? Okay, so looks like we have about 67, 70% that have voted. So I'm going to go ahead and close that poll. so that you can see the results. And the correct answer is the prepaid credit card. All right, let's go ahead and let's do another quick question here. Okay. So our next question is, which credit card APR or interest rate would apply if you take money out at an ATM using your credit card? So go ahead and make your selection on that question. Which credit card APR would apply if you take money out of an ATM using your credit card? Which APR? Would it be standard APR, penalty, balance transfer, or cash advance? All right. Got a few more people voting here. Give it a couple more seconds. Let's go ahead and close that question and share the results. The correct answer is cash advance. When we use our credit cards to take money out of an ATM, we are applying the cash advance interest rate, which is typically very, very high compared to your regular interest rate. All right, so let's do one more and then we'll go ahead with the presentation. So this question has to do with the grace period, true or false? The grace period of a credit card refers to the amount of time you have to pay the balance before late charges are applied, true or false? All right, so we have our voting completed, and everyone selected true, and this is actually kind of a little bit of a trick question because the correct answer is false. Okay, the grace period on a credit card, it refers to the amount of time you have to pay the balance, which is true, but instead of before the late charges apply, it's actually before interest charges are applied. So the grace period gives you that leeway before the interest charges are applied and not necessarily the late fees. So that one was kind of like a little trick question I threw in there. But well done on the questions. And we're going to do another poll at the end just to have a little fun with the information that we're sharing here. All right. So now let's go into our next topic, which talks about how do lenders choose to whom to give credit. So say that you've been shopping for a credit card and you've done your due diligence, and now you have submitted that application online or in person for your credit card, your new credit card. Now, how do the lenders choose to give you credit or not? All right. So here are some guidelines that they use. They're actually something we call the 3 C's that are used in order to determine whether or not that lender will extend credit to you: character, capital, and capacity. So let's take a look at what those 3 refer to. For character, the areas that the lenders are looking at include how responsible are you with your debt. So they take a look at your credit report, your credit score. Have you used credit before? Do you pay your bills on time? Basically, what is your ability or your reliability to pay your credit debts? They also take a look at your address. How long have you lived at your present address? All of those roll into components that are considered when they look at character. When we talk about capacity, lenders look at your ability to repay the debt. So some of the areas that are considered include your employment status, your income, your debt to income ratio. That means what percentage of your income, net income, is going towards paying down debt. They also consider how long you've been at your present job. Do you have a steady job? What's your salary, your income? What other loan payments you may have, and your current living expenses. Essentially, lenders at this point will take a look at your monthly budget to see how you are managing your income and your expenses. And then when we look at capital, capital is associated with the assets that could be used if income becomes not available. And assets are collateral, savings accounts, property, those types of things that can be used if income is not available to repay that debt. So lenders look at your property, they look at investments, they look at savings accounts. All of these things are part of that formula that lenders use in order to determine whether or not they will extend a credit card to you. And I wanted just to cover a couple of quick slides here on your credit score, since credit score is such a large part of the decision of lenders to extend a credit card offer to you. When we take a look at the pie, if you will, for your credit score, your payment history makes up 35%. And payment history is, do you pay your bills on time? And that makes up 35% of your credit score. Another huge block of that is your debt to available credit ratio. Now, we just talked about debt to income. This is your debt to available credit. So if you have $10,000 of credit available and you have used $9,000 of it, that's a 90% utilization. And the higher your utilization, that actually brings your credit score down. So you really want to keep your credit utilization around 30% so that you have a good margin as it relates to your debt available versus your actual use of that debt. Then length of your credit history, new credit, and types of credit are some of the other percentages. So this just gives you a good, like, high level view of what's involved with what makes up your credit score. And this is also a good slide I wanted to share because it also shows how credit problems can really impact your credit score. So if we have someone with a FICO score around 780, which is very good, okay, because the FICO score goes up to 850, so this is a very good score. Here's what happens to that 780 score with some of the credit problems that can come up. So say, for an example, the person maxed out a credit card. That immediately would drop their score down to like the 735, 755 range. Then what happens if they're a month late on their mortgage? Then that's almost a 100-point drop on their FICO score. What about if they settle a credit card debt? So there's a lot of advertising right now about debt settlement firms and companies. You know, they say, hey, you don't have to pay all of that, all those charges back. Call us and, you know, we'll work out a deal for you. Sure, they can do that, but then it's also going to affect your FICO score. And one of the things also about debt settlement programs is that if you owe, say, 10,000 and you settle for 5,000, that difference of 5,000 is actually considered income. So you would have to report that on your federal taxes. And so there's a lot involved with debt settlement that you really need to be aware of before making that choice. But for some people, it is the right choice to make. If there's a foreclosure, that can affect your FICO score, taking it down into the 620, 640 range, and then bankruptcies really hard hit on your FICO score. So this is some good information, guidelines just to, you know, keep in mind as you consider how to manage your credit. So now, what will we do if you find yourself encountering uh, some credit problems or credit issues? Just some things to keep in mind that will help to actually build your credit history. If you need to increase your credit score, here are some tips. You want to make sure that you have a steady work record. You again paying your bills promptly. You're going to hear that throughout this presentation because it makes such a big impact on your FICO score. If you have a checking account, you want to make sure, which most of us do, we're not bouncing the checks. Uh, that type of activity is not reported to the credit bureaus. However, if you're working, with banks and you have a checking account at that bank, they can see your history with your checking and your savings account. If you're using a local store credit card or retail store credit card, again, just making your payments on time is key. And sometimes applying for a small loan using your savings account as collateral may help to also build your credit history. All righty. Secure credit cards is another potential tool that can be used to help you to build your credit history. And the way that secure credit cards work is that, hang on one second. A secure credit card is a little bit different from a regular credit card because you have to make a deposit in order to achieve or attain the credit card. And that deposit then serves as collateral for your card. So if you default on your payments, then that card issuer will keep your deposit as collateral on that card. And typically, the card will give you a credit limit. Once you make your deposit, it'll give you a credit limit between 50 and 100% of your deposited amount. And you can use that credit card just like you would use any other credit card that you have. So there are some good things about using or having a secure credit card if you need to rebuild or reestablish your credit. Usually you can get approved and your payment history is reported to a credit bureau. Unlike the prepaid credit cards, which you can use it like a credit card, but your payment history is not associated with a prepaid credit card. With the secure cards, it is. So that helps you start to rebuild your credit history. Uh, Secure deposit is used if you default on your payment, but most of the secure credit cards will allow you to earn interest on your deposit. So there are some good things about the secured credit cards. There are some drawbacks as well. Just remember that you do have to pay that security deposit, and there are typically fees associated with a secure credit card, and also the interest rates might be a little bit higher. So you really have to weigh the pros and the cons of both situations or scenarios related to secure credit card to determine if that's the best choice for you. Okay? All righty. I want to pause right now and see if anyone has any questions. Remember, you can go to the chat link in your dashboard and just type in a question, and it'll pop up on my screen and Ann's screen, and we can answer your questions. So just remember that if you have any questions as we're going along, just go ahead and type in a quick chat and we can discuss your question. Okay, so I wanted to cover one other area, and this relates to, well, how much credit can you actually afford? So following along our example here, let's say you've been shopping for a credit card, you've done your due diligence, you've looked at all of the terms and conditions and everything, you selected a card, you've applied for that credit card, and now you understand the different areas that your lender or that credit card issuer will be looking at as far as your credit history, your FICO score, and so on. Now, the next couple of slides just give some good examples of some of the things also that your lender or that credit card issuer will be considering, as well as just some good information for us all to know as we're managing our finances. So, what we have on the screen is a pie chart of basically how your budget, I would say, a suggested percentages for a personal budget. And in this case, since we're looking at personal debt, which includes credit card debt, the the recommended range is that you have no more than 15% of your net income going towards personal debt, like credit cards. So we're going to do an example here, two scenarios. We understand that our total debt should not exceed 15% of our net income. So in our example, if you earn $2,000 a month after taxes, your net, then your annual net income, for example purposes, is $24,000. If we calculate 15% of that 24,000, we come up with 3,600. And so in this example, our total debt should not be more than $3,600 for the year. This is for the whole year. Okay. And this will allow you to be able, when we think about that pie chart again, just be able to manage your debt without it becoming overwhelming. It also, it also will be a benefit or an advantage to you when the lender does that budget and they see the percentages of those different categories and they see that you're around 15%, that will be a plus for you as you're applying for credit. Here's another example that talks about the monthly payment. So we looked at total debt being no more than 15%. Well, the monthly payment should not exceed 10% of your monthly net income. So in that same example, if your take-home pay is about $2,000 a month, 10% of that will be $200. So then your total monthly debt payments should not total more than $200 per month. And again, these are different aspects or areas that lenders and card issuers will consider as it relates to how you're using debt related to your actual net income. So there are credit cards, do's and don'ts, and we actually have a handout. If you go to your dashboard on the right side of your screen, there's a section that says handouts. Take a moment and click on that item, and we have a document that you can download. If you just click on that PDF file, it will download a whole list. It's about 6 pages of do's and don'ts related to credit card use, which really has some good items listed here. We don't have time to go through everything, but I encourage you to go ahead and download that handout. Some of the things include, what to review on your monthly statement, how you can call your creditors to try to lower your APR if it's applicable, and advice on only applying for credit cards when you have a need for them. How to use your lowest APR card for big purchases. So there are a lot of tips in this document. I encourage you to download it. We also have another downloaded document. Credit cards is actually a booklet that we produce and make available, which includes a lot of the information that's in this presentation, as well as some additional worksheets for you. And then we also have, a PDF file of the presentation that we are covering today. So if you would like to download any of those, just go ahead, click on it, drop it in the download file, and the system will do that for you. Okay. All right. Now, the final slide, one of the final slides I have to do with your rights. There are several credit laws that have been enacted that protect consumers. Hmm. And as you're using credit, for example, the Truth in Lending Act, that law came about, federal law came about in 1968. And this is the law that ensures that consumers are fully informed about the costs and conditions of borrowing money, whether it's a loan or a credit card or a mortgage or what have you. So in this case, this law actually is one of the laws that helped to change the way that our credit card statements look, so that there's more disclosure and there's more information that's made available to us as consumers about the terms and conditions of our agreement with our lenders. So each of these acts, if you download back to the handouts that booklet called Credit Cards, there is detail of each of these federal laws in that booklet that indicate, which ones have afforded and certain protections for consumers as it relates to how we are using credit. Okay, so you do have some laws. We have laws on our side to help protect us. All righty. So our credit responsibilities, as much as we've covered a lot of information today concerning what lenders are looking for, the process of obtaining credit cards at a high level, we also have some responsibilities as it relates to managing our debt, in particular, our credit responsibilities. So, these are just a few tips to keep in mind as responsible credit users. Avoid buying on impulse. This is back to that study at the beginning where they showed that most of the time, if we purchase something with a credit card, we actually spend more than if we purchase with cash. And this relates to buying on impulse. So that's something that we have the responsibility, to control that. Also, borrowing only what we can realistically repay. If we cannot repay, that $2,000 kitchen package, realistically, then okay, our responsibility is not to go there. Let's look at some other options. Look at some cash options. Look at, all of that moves into the arena of personal money management. And it is, again, part of our responsibility to manage that. Making sure that we understand our credit card contract and the terms and conditions so that there are no surprises at the end of the month when we receive our statement. We'll hear over and over again, pay your debts on time. That's one of the big, big pluses that will go a long way in improving your credit score and your credit history. And then, if for some reason payments cannot be made on time, be proactive and notify your creditor so that you don't fall into late payments and late fees and that whole cycle. But again, take the responsibility, contact them, let them know what the situation is, and many creditors have programs, hardship programs that they can actually assist the user with if in fact it is a true hardship that the credit card holder is temporarily, experiencing. And on that note, we are going to do just one more poll, a few more questions to see how well you've been listening. And then we're going to go ahead and wrap up for today and also do one last round. If there are any questions, go ahead, use the chat feature to submit your question. And we're going to just take a couple more. Let's look at one other question here. All right. So here's one for you. What are the three C's of credit? we talked about that as a part of the criteria that lenders take a look at in order to determine whether or not they're going to extend credit to you. So the poll is open. Go ahead and make your selections. What are the 3 C's of credit that we covered today? We'll give just a few more minutes to go ahead and record your choices. All right. All right. So we have a couple of different answers here that have been selected. And the correct answer is the 3 C's are character, capacity, and capital. That third option, character, capacity, and capital. Those are the 3 C's that lenders consider when they're looking at whether or not they want to extend credit to you. Okay, so this last question has to do with one of the federal laws that are available that helps to protect us. So under the Fair Credit Billing Act, what's the maximum liability you will have if you report a stolen credit card within 30 days? Okay. All right. I'm going to go ahead and close that poll and share the results. And you are 100% correct. $50 is the maximum liability we have if we report a stolen credit card within 30 days. And thanks to the Fair Credit Billing Act, that law is in place to help protect us. Great, great, great. You guys have done a great job on the polls, on the questions. Okay, so at this point, I am going to hand over to Ann to just share a couple of things concerning Life Credit Union and any key messages that you have at this time. Ann, go ahead.
Well, I'd like to thank you, Evelyn, for leading our webinar. You did a great job as usual. And as I believe Evelyn mentioned, this webinar has been recorded. So if you want to encourage others to see it, we would love for you to do so. It will be on our website, lifecu.org. So that would be great. And of course, I'd be remiss if I didn't thank you. If you're a member and you're on, thank you for being a member. And if you're not a member, join us and experience what life can do for you. So we thank you, Evelyn, and those attending.
Okay, thanks so much, Ann, and thank you. It's been my pleasure to be your presenter and host for our first webinar in our series for 2018-2019. I know that you guys have all of the webinar information at your website, lifecu.org. So I encourage your attendees to go ahead, take a look, and check out the webinars that will be coming up between the rest of this year and into 2019. We got some great topics coming up. So it's a great lunch and learn event, you know, to increase your financial education and also understand and learn about the great products that are available at Life Credit Union. Ann's contact information is also on the screen, so feel free to contact her as well. So on that note, we are actually going to give you back about 10 minutes, okay, on today. And I'm checking our question chat file. I don't see any questions here, so I'm assuming everybody is good there. And on that note, we're going to go ahead and close out and wrap up the webinar. Thank you again for joining, and we look to see you next time. Have a great rest of the day. Bye-bye.